Good morning to all of you, DLC friends, family, anyone tuning in today. Really appreciate you being here. Good morning to those of you in the West. Good afternoon to all of you in the East. Today's CEO to CEO, which is our show that helps you get to know your CEO. We are hosting Mr. Jason Ellis. A lot of you know Jason. He's been around for a very, very long time. Young, dynamic, very refreshing, forward-thinking, and obviously is at the helm of First National. First National has been one of our most incredible partners. We've had a deep relationship with them for years. So we are thrilled to bring you Jason today. I'm going to quickly read his bio. Jason Ellis is the President, Chief Executive Officer, and Director for First National, and is responsible for the design and maintenance of strategy and operational excellence across the organization. Jason joined First National in 2004 and has been responsible since then for leading First National's capital market activities, including interest rate risk management, funding, securitization for all commercial and residential mortgage origination. Jason was appointed the Chief Operating Officer in 2018 and President in 2019. Prior to joining First National in 2004, Mr. Ellis was with the Asset Liability Management Group at Manulife Financial and was with RBC Dominion Securities in Toronto and New York, where he traded fixed income and interest rate derivatives. Jason holds a BA degree from the University of Western Ontario, an MBA degree from McMaster's University, and is a CFA charter holder. Jay from Toronto, good afternoon.
You.
Good afternoon, Jay. How are you?
Good. Am I off mute?
Perfect. Got you. Yeah, you're off mute. Good. Hey, it's good to see you. It's been a while. It's been a crazy last year. I had you on a program for a small group not long ago. Really looking forward to speaking with you today. Why don't I just sort of kick it off to you and tell me what's been going on the first few months of this year?
Well, I mean, I feel like a lot of us have been playing catch up. The volume last year was amazing. I think the final tally for 2021 was that as a market, the broker channel was up as much as 45% year over year. So certainly a lot of growth and a lot of growing pains. I think over the first couple of months, Gary, we're probably seeing a moderation in total unit volume, but fortunately or unfortunately, depending on your position in the market, if you're a buyer, housing prices have continued to accelerate such that I think dollar volumes may even be up year over year.
Right. Yeah, it's really interesting. So when you look at your crystal ball, Jay, you know, there's been a lot of speculation over, you know, what's going to happen 12 months going forward. When you guys are writing your plan at First Nat, what are you sort of thinking about, and what do you guys internally sort of predict the numbers to be? And before you do that, before you answer that question, just a reminder to anyone watching today, if you have a comment or a question for Jason Ellis, just go to the chat box there. It'll come up on screen. If there's any questions, we'll certainly pass them on to him.
Okay. Oh, I see Jody there. Yeah. Hey, Jody. Jody and I went to high school together. Small world. Yeah, thinking about this year, obviously we've had, as has the whole industry, to be fair, a winning streak that's been going on about 20 years now. And so I think the big challenge Scott McKenzie has is he'll put a plan forward, and then Stephen Smith before me and me now will accuse him of sandbagging his numbers because I can't remember the last time we didn't crush our plan. I think this year, to be fair, it's a lot more challenging. And we do think about it two ways. We think about units and we think about dollar volume because housing prices can have such a profound impact on how we think about how we did year over year. So I think that we're still pretty bullish on this year. I think that all things considered, we're still looking for growth. And I think about the business more and more in two parts, the prime business and our growing Alt-A Excalibur platform. Mm-hmm. And so when you factor in the growth in Excalibur, we're definitely looking for to be up year over year.
You know, it's interesting. I just posted one of those Facebook memories came up on my Facebook yesterday morning, and it was a picture of one of the major newspapers. God, I got a brain lock right now, but I posted it 12 years ago, in 2012 rather. So, you know, 9-10 years ago now, and it said we have hit the lowest rock bottom interest rates ever, and that was 12 years ago yesterday, and here we are. So yeah, in fact, it has been a run for, you know, a very, very, very long time. So, it's interesting because we're starting to see a shift in some of the markets. We're starting to see, obviously, the business has been incredible, but we are starting to see a higher, there you go, the Globe and Mail that I posted yesterday. We are starting to see a higher proportionate, amount of volume overall going towards, sort of the alt A market. We're starting to see that shift. Any comment on that? And I mean, we expect that to be a very busy segment of our market this year.
I guess at the margin, with the way prices have moved, combined with now this most recent movement in interest rates, marginal buyers, I think, when faced with the stress test and or traditional prime debt service ratios, are migrating now, perhaps out of necessity, into more flexible programs like Excalibur, where there are exceptions to be had on debt service ratios,
Right.
or thoughtful ways we think about sources of income and the like. So I think it may very well be just a function of where we are in the market now with respect to affordability. I think we're sort of hitting a very critical inflection point. So yeah, we've seen people moving to that space.
Yeah, it was interesting. Just jumping sort of back to the market in general. Dr. Sherry Cooper and I were on a call just a little over a week ago, and I said to her, "What are your predictions?" I mean, as you mentioned already, we've seen escalating house prices, and and we're continuing to see escalating house prices. And I asked her, what her thought was on house prices continuing to escalate, and she said, "Gary, I can't think of anything that's going to slow them down."
I mean,
Do you
I
share
think,
those sentiments?
yeah, I do, in the sense that there is undoubtedly some frothiness in the market. You can't really explain all of what's happened with prices without some frothiness factored in. But I think that there are still solid fundamentals underpinning our market, and across the country, not just in the GTA or the GVA. The demographics, maybe related to immigration, as well as the continuing issue we have with a lack of supply, create a foundation that justifies price appreciation. I think that the low rate environment that we've had for so long has obviously accelerated prices to an unsustainable pace. Will prices go down this year? It's hard to imagine, but I think that the increase in the overlying or the overall interest rate market will probably help moderate the pace of increase. So I think prices are stable. I know that there's been some news, specifically, I think an economist out of the BMO that was calling for perhaps a material test to housing prices. I think that some of the headlines around his commentary was inflated. I don't think anybody's looking for any kind of meaningful collapse in housing prices.
Yeah, no, I would tend to agree. We had a question. A couple of them came in. You want to just flash one on the screen, Dave, and let's see what it is. When are you launching your LLC product?
So this is the promise I keep making, and the promise that I think I keep kicking down the road a little bit. It's a popular product. It's the major missing piece in our product lineup at First National. One of the challenges I've always had with the line of credit product is that it feels to me like a pure bank product. I think borrowers traditionally would like to be able to log in, move money around from their line of credit to their checking account to their mortgage and back and forth. As a non-bank lender without a deposit base, I don't think it lends itself to our type of funding to offer a consistent, competitive offering that could come anywhere close to as slick as what TD offers through Fluxline now, or what the Scotia offers through the STEP. That said, I'm hearing the message often enough. It is on the roadmap, and with apologies to those of you that are looking for it, there's just so many resources and so much time, and we kind of keep stacking things or reordering things. So there will be a line of credit. It's just, I can't even tell you when just now. Apologies.
Hey, Jay, let's talk about just quickly to dovetail on that last comment, resources and staffing challenges.
Yep.
I know First National has felt some of those challenges, as has every other lender. The premium and just the sheer amount of underwriters that are required just simply aren't available. How are you guys navigating that difficulty, and do you see that improving?
I definitely see it improving in the sense that as housing activity continues to moderate, I am seeing the the frequency with which we're losing staff members reduced, we're also investing heavily in retention and working with our teams to make sure they've got everything they need. And I'm making personal pleas to them to stick with us, right? The pressure we've been under the last 18 months in terms of dealing with volume is transient. It's not always going to be this way. But when we stack up the incredible growth we've seen in the market and then layer on top of it the great growth we've seen in our own activity at First National and some of our third-party partners, it's been extra hard to keep up with, because not only are we trying to hire, but the entire industry is trying to hire. So I'm throwing all the resources I have at it. I'm seeing good traction in terms of our headcounts are growing, but we still have lots of postings. And so if you know anybody, send them my way.
Absolutely. Let's talk about the immigration impact. I mean,
Yep.
you know, there was a study that just recently came out, 840,000 new immigrants over the next 2 years. Many of who have been in the country already, who are just, you know, getting their permanent resident status. Historically, they buy within, you know, a couple of years of getting their permanent resident status. What sort of impact do you think that's going to have on us? And what is First Nat doing to sort of think about that or prepare for that?
Yeah, so I think more of an impact than we might think, because if you look at the statistics from 2021, remarkably, we actually met our 400-odd thousand quota of immigrants, despite all of close downs due to COVID. But as you mentioned, a lot of them were already here.
Right.
And so they weren't net new. They were existing people in the country who were gaining their citizenship status. I think as we look at 2022 and 2023, those 800,000 you mentioned, I think a much larger percentage of them are going to be net new to Canada. And Canada's immigration policies are such that we have some of the highest quality, economically viable immigrants in all the world. And so what that means is a direct and meaningful impact to the market. We're going to see it in the rental space, and we're going to see it in the new home purchase space, because a lot of these people are coming with skills and equity, and they're going to be looking to make a home. So I think that their impact's going to be felt immediately.
Mm-hmm. Jason, what do you, how do you think, and what are you thinking about sort of, you know, what you've learned from COVID-19 going forward? I mean, you mentioned it at the top of the call. I mean, year over year, we had, you know, 45% plus increase in market share acceleration. And I mean, it's amazing to me that we as an industry were able to keep up to that. Right. And because I mean, that is such a massive jump in the last sort of year or two. What have we learned from that? And how is that going to change your business going forward?
Yeah, well, two things. One, I will say, as forward thinking and progressive as I like to think First National is, we were old fashioned in the way we thought about working from home. And maybe I'll pin a little bit of that on Stephen and Maury, our principal founders. But I think with COVID, we were forced to rethink that. And what an amazing discovery that's been. I mean, I think that the team has performed brilliantly. And I think that we're going forward going to be a very flexible workplace, which hopefully helps with retention and recruiting going forward. So that's been a fundamental shift in the way we work. And I've been pleased with how that played out. And the other thing I think that we've learned is that on the one hand, First National and I think our broker community generally is incredibly scalable as a business. I think in 2020, the year over year growth was like 35%. In 2021, it was another 45%, as you said, Gary, over that. The fact that we were able to accommodate that at all is remarkable. But as scalable as we are, I've also learned that there are limits to scalability. And so at First National, we're definitely revisiting areas where technology can take us to that next level. Auto pre-approvals, automated document reading, which is going to help with fulfillment, all these kinds of things. So the list of opportunities is as long as my arm. They're too complicated to put into place in time to say help with today's service level challenges, but definitely things we're looking at going forward.
Yeah, let's talk about quickly sort of the broker community itself, the broker channel. I mean, you know, obviously we've had just massive acceleration. We're seeing some new lenders come back into the space. But if you look, you know, to our neighbors that resemble sort of our marketplace, if you look at the UK, you look at Australia, I mean, they are 60 and 80% respectively of the broker market. We've been on a tear, obviously. You know, I've been quoted many times as saying our next 5 years would be our best 5 years. Where do you see, and how does First Nat? I mean, obviously you're reliant on the broker business to a large degree. Where do you see the broker business going? And are we going to flatten out now, or can we get to 60 to 80%?
So there's no question. I think the broker channel as a whole benefited through COVID because the banks obviously lost access to critical parts of their distribution strategy through their branches. And I think that a lot of those gains are going to be sticky. I think that I think the banks have rebounded really well. If you look at some of the numbers, the year-over-year growth numbers at the banks, excluding activity in the broker channel that they may or may not have, they've rebounded really quickly, and branches coming back online have really made a difference. But some of this is going to be sticky. So I think as a channel, we're going to enjoy some permanent increase in market share. I think it's liable to level off a little bit, but I think that attitudes are changing as we get to the next generation. I'm thinking about my kids who are both in their early 20s. For them, the idea of wandering into a bank branch is unthinkable. It's just not what they do. Whereas I'm sure most of us on this call, or many of us over a certain age on this call, just were under the assumption that the only way you got a mortgage was going into a bank branch. And I'll put my hand up, honestly, when I started at First National in 2004, I didn't even know mortgage brokers existed, right? Okay. And I think that's changed. So I think that, yeah, do we go from 40 to 60% over the next 10 years? I think it's hard not to. I really do.
Yeah, we would tend to agree with you on that. A couple questions came in. Dave, if you want to put them up on the screen one at a time. Can you please explain what factors are at play when we see the changes in prime minus percent? Why do the insurable prime minus change?
So with the global geopolitical environment becoming so destabilized with what we've seen going on in Ukraine, risk premiums have increased on all manner of fixed income products. Most notably, if you pay attention to what the banks are doing, they issue deposit notes of all manner. And the credit spread on those notes relative to the risk-free rate of the Government of Canada bond curve have increased. And so those form a significant percentage of, say, a bank's cost of funds. So as the credit spread they're paying to raise money to fund asset acquisition like mortgages, so do the spreads on the mortgages have to change. And so by reducing the discount to the prime rate, the banks are adding credit spread to offset some of their own increases in costs. And that's probably the most fundamental explanation.
And are you expecting, Jason, just right along those lines, for that to continue for some time? Do you think we're going to see the wide sort of discounts in the next 12 to 24 months again?
I don't think we're going where we went in the global financial crisis. So for everybody on the call that was here for that, you'll remember that we were at prime minus 100 a lot, pre-2008. And we very quickly got to prime flat, to even prime plus, Gary, if I'm remembering correctly, though. Right, yeah. The global financial crisis, I still try to block out of my memory if I can. But we very quickly got back to where, we were at prime minus 110 for insured deals, prime minus 95 for insurable. Where are we now? I think some of the bank lenders are as high as prime minus 55, prime minus 45. I don't think we're going back to prime flat. Right. Now, don't quote me on that 6 months from now if the world's changed dramatically, but I think that the credit markets generally have responded well. This is no global financial crisis. There's not a liquidity problem, which was at the core of the global financial crisis. This is just more of a general geopolitical response to what's going on in the world. So I think that we're going to be stable from here.
Yeah, thanks for the question, Nance. Deb White, good to see you as well. She's saying big fans of yours, Jason, from Vernon, British Columbia.
Thanks, Deb.
So Jay, if you look at the business right now, the way it's operating at very high capacity, everyone is stretched. There's been immense stress, slower turnaround times. Let us try to help you for all the professionals that are on the call right now. What can we do to be better partners? What can we do as far as packaging, our deals, our communications with underwriters, how can we help you?
Yeah, well, first thing I'll say is, what I know that we can always do a better job for you is communication. And I think that there are some people that put, I think, an unreasonable premium on, say, this idea of 4-hour turnaround time. I've got to believe that just about any broker or borrower would be quite happy with next day turnaround. I think what you really want to hear from us is clear communication about where we're at, so that when you submit a deal, you know that the next day is what you're expecting, and hopefully that's going to be a reasonable turnaround for you. So we're going to work better or harder at making sure that you always know where we're at in that respect. And the one thing that you guys could do for us, and I'm a bit of a broken record here, I've said it before, is especially as it relates to pre-approvals. If you've got a real borrower and they're out there looking for a house, send your pre-approval in as soon as you can.
Right.
Don't wait until the rate change happens, because two things. One, it absolutely slams the underwriter queue because we get 3-4 times the normal application volume. And then, so that slows things down. And then, to be fair for us, it's the worst possible time. When do we increase rates? Well, we increase rates, of course, when, we've got mortgage rates here, and then the underlying yields are going up, 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 up. Finally, we can't take it anymore. We announce the rate change, and this compressed margin is when all the pre-approvals come in, and it's devastating. And pre-approvals are a really expensive option to offer out, and we want to keep offering those. So my request would be, send your pre-approvals in as you have the opportunity to do it. And I understand that there is a desire to maximize the length of time you have here with your pre-approval. So I would say, don't be shy. If you got a pre-approval, 60 days ago, and your borrower is struggling to find a house, don't hesitate. Call up your salesperson, call up your underwriter, and say, listen, my borrower is live. We still haven't found a house. Let's reset our pre-app. Now, please don't send me in a reset all my pre-apps. If you can do this thoughtfully and stick to your real live borrowers, I'd be grateful, and your underwriters would be grateful too.
Awesome. Thanks for the comments around that, Jay. So we're going to get to kind of a fun portion, rapid fire here in just a minute, but I want to just talk about one more subject before we do. Government sort of intervention, government regulation, government changes. We've seen so many over the last 5 years. There's some talk again about, maybe some other changes coming. What are you hearing, and what are your thoughts around that?
Yeah, well, it's a busy time right now. So Ontario just came out with a series of announcements in the last day or two. Right. Most notable among them, of course, is the increase of the foreign buyers tax from 15% to 20%, and expanding it outside of the Golden Horseshoe to cover the entire province. And this is meaningful because I saw an interesting statistic today, which showed that in 2017, when the first foreign buyers tax was introduced, it had a profound impact that maybe you didn't notice. So leading up to 2017, the average price of a house in the area that was affected, that greater Toronto Golden Horseshoe area that was affected by the first foreign buyers tax, the price of those houses had risen twice as fast as, say, a community like Windsor.
Wow.
The moment 2017 came and the foreign buyers tax was first announced, we saw the delta between a Windsor house, as an example, but you could pick any city that fell outside of the Golden Horseshoe. You could take the Windsor price, and the delta between them has converged all the way back to where it was in like 2006. So the impact was significant, but it only meant that the foreign buyer money flowed outside of the affected area. So now that it's going to affect the rest of the province, I think we're going to see a real impact there. And then in BC, I think just earlier this week, Gary, maybe last week, announcements around some changes that are going to help protect buyers, give them an opportunity to make sure they get that appraisal they need, or give them time to get that home inspection they need, give them time to make sure they can get their financing lined up so that there's not quite of a panic around buying houses. I think those are important changes. And then, of course, I think next Friday we have the federal budget, and there you go, there it is. And next Friday we have the federal budget, and then the Liberals are going to bring forward, I think, a lot of the changes they talked about in the election platform. Most notably, I think they're going to increase the maximum property value to qualify for mortgage default insurance, which I think is going to be, a big win for the industry.
Yeah, no question, no question. Thanks, thanks for those comments, Jay. Okay, we're gonna just go to the last few minutes here and have some fun. I've known Jason for a few years. Obviously, it's Jay. Congratulations. I've really seen the change in you over the years. There wasn't one F-bomb today on this call. Big changes happening with Jason Ellis. Always
Trying to
been
behave
known
myself, Gary.
Yeah, always been known as a straight shooter, completely frank, open, always given a very generous sort of reflection on his thoughts around the market. So thank you for that. So Jay, rapid fire questions. So do you prefer texting or talking?
Talking every time. When I text, I still use punctuation. I still use proper grammar. It just takes far too long. When I send a text to my kids, they're like, this is like an email. What are you doing? So,
and how old are the kids now?
22 and 19. They're both at Western.
Very cool. Nickname that either your parents or you're called as a kid?
As a kid, I was just known as Ellis. Not very clever, and I don't know why, but somewhere along the way, my first name got lost in the shuffle, and I just became Ellis. If my wife has a nickname for me, I don't know about it, and it's probably not very nice.
Yeah, it's probably, starts with profanity.
Yeah.
So I know you've been in the business for a long time, and obviously you're super tight with Stephen and Maury. But maybe share with us, someone or a couple people in the Canadian mortgage space that you admire that have been very helpful to you in your career.
Yeah, well, present company excluded, of course. I will say, without the least bit of sarcasm, I'm very envious of the mortgage broker at large. I think having the courage to hang your own shingle, run your own business, it's something I never had the courage to do, and I have a huge amount of respect for everybody who goes out there and makes their own business. But in terms of an individual, I don't know how many people on this call have had a chance to meet with them. Gary, I'm sure you have. But Andy Charles, who is the CEO of Canada Guarantee, he is the most thoughtful, kindest, genuine gentleman I have ever met. And I think that he is a gem in the industry. And if you ever do get a chance to run across Andy, go up and say hello, because he's a real treat.
Yeah, that's a beautiful sort of note on Andy. I much feel the same way.
Oh, wow, that is impressive work. There's Andy.
There you go. Yeah, great guy. Secret indulgence.
Well, you can see over my shoulders, actually, one thing that I did during COVID is I went out and rebought a turntable and have now been slowly but steadily repurchasing all the albums I used to have as a kid. So going back to the LP, and then also back there, you can probably see the remnants of a bottle of Johnny Walker Blue, which is a little treat on a Friday afternoon.
Yeah. You know what? Vinyl, it's amazing, right? The more things change, the more they stay the same.
Yeah.
Everything comes back eventually.
That is nice eyes. That is an ELO album. Out of the blue.
Sort of pet peeve. What bugs you? What don't you like that you get frustrated with?
Okay, this is really small of me, and it's been well documented at First National. For some reason, I just can't stand it when people turn acronyms into words. So a perfect example for our industry is, ever since B20 came out, we've had residential mortgage underwriting policies,
right?
Or RMUPs. But when people start calling them arm-ups, and even worse, switching the letters around and calling it a rump, it just makes me wild, and I don't know why. I can't stand it. Probably crazy, the worst. When the new IFRS accounting standards came in a number of years ago, all of a sudden everybody's referring to IFRS.
IFRS,
and I thought, don't do it.
Yeah, absolutely. Your favorite holiday? What time of year do you love being with family or hanging out or summer?
You know what? It's not even the actual holiday itself, but it's the days between. There is no greater time of year than those days between the Christmas stat holiday and the New Year's Day stat holiday.
Right.
Like a lot of people, I'll take those off. But what's so special about those isn't just the holiday. It's the fact that everybody is chilling out. Mm-hmm. It's not just my day off. It feels like everybody's day off. And there is a peace about those days that is incomparable. So hands down, the days between Christmas and New Year's, favorite.
Yeah, I love that time of year too. It's just so peaceful. Favorite cocktail? We already got it. Johnny Walker Blue Label. Anything else that you drink?
Yeah, well, my wife took up a bad habit of her own during COVID. She is now loving whipping up cocktails. I think if I shift this, where is it? You can just see, oh, there's her cocktail cart peeking out
Okay, I
around the
see it,
corner
yeah.
there.
Yeah.
But she's got me drinking Dark and Stormies,
Oh,
which
yeah.
is your dark rum and ginger beer and lime, and a bourbon-based thing called a Paper Plane, which is just really nice.
Sounds like a good cocktail. Kind of music you like? Favorite music?
I was born in 1970, so I would say I straddle that sort of late 70s classic rock era into the beginnings of that 80s new wave kind of thing. So
Okay.
you'll find Led Zeppelin in my albums, but you'll also find Depeche Mode.
Right on.
Quite the range.
What goal, Jason, are you still trying to achieve?
Oh, being a better listener, Gary. My wife calls me a bulldozer. I have a bad habit of talking. It's probably presented itself even in this chat. I've always got more to say than needs to be said. So I'm always working on being a better listener, which I think is key to maybe being a better leader too.
Yeah, I would agree with that. And lastly, Jay, what are you most grateful for?
Oh man, geez, that feels like a loaded question.
No kidding, huh?
The simple things. I'm simple to have this house and a beautiful, healthy family to spend my days with. Just the simplest things. I don't wish for a thing. Really, really lucky.
And there you have it, friends. My friend, Mr. Jason Ellis, President and CEO of First National. A lot of you know the First National is our sponsor on the Level Up programs that have been so successful over the last couple of years. Thank you for that, Jay. You guys have been great. Huge fans of Scott McKenzie, Stephen, Elena, and the whole gang at First Nat. So appreciate that. Any last minute words, Jay?
No, just thanks to everybody, the Mortgage Architects, Mortgage Center, DLC, the whole team. You guys are obviously just an absolute powerhouse. Congratulations on the success across the whole spectrum of businesses, and just so pleased to be a partner with you guys. So thanks very much for having me, Gary, and thanks to everybody on the call for your support. And I'm an open book, jason.ellis@firstnational.ca. Send me your complaints, send me your suggestions. I'd love to hear from each and every one of you. So thank you very much.
And lastly, Jay, too, as I thought about it, you guys were early adopters and super supportive, and the first to launch the digital doc upload with Velocity. Velocity's absolutely killing it, going really well with First Nat. So thank you for all that work and help and support around that too.
It's our pleasure, Gary. Thank you.
Okay, guys, listen, Dave, you got a couple of graphics for upcoming CEO to CEO. Next one is with Mr. Paul Taylor. Thursday, April 28th, same time, 11 o'clock Pacific time. And then our next level up is with Greg Westlake. He is the paraplegic ice sled athlete and medalist. Got a great story. Super happy and excited to have him on the call. So with that, guys, thank you very much for tuning in. We'll talk soon. And if you need anything, guys, as always, Gary@dlc.ca. Have a great day.